Good morning, good afternoon, good evening, wherever you may be. Oh, didn't mean to do that. There we go. Let's do that. Okay, great. The disclaimers are top left-hand corner, so please read them. Welcome to the 3D market commentary. Today is Friday, the 5th of November. If you're in Britain, then we remember the 5th of November. With the 3D market commentary, what we'll do is we go through an email that we send out every day to our free members. In that email is information and statistics on 5 major world markets, and for each of those markets we look at 3 separate elements. That's why we call it a 3D market commentary. So we do this video to expand on that email, give you guys a bit more context, a bit more information. My name's Becky, my email address is there, that's becky@tradictive.com, and then we have support@tradictive.com as well, so you can email either one of those. And like I said, please make sure that you read the disclaimers. You can pause it or go back to it as well if you need to do that. Okay, so let me just show you another place you can go very quickly to post questions. So if you go to tradewithufos.com/Becky, you can then come here to do a variety of things. You can get apps for different platforms straight from this link. You can book one-on-one coaching with me if you'd like. And you can also come down here and post questions in a public space. By posting the questions in this public space, we can then answer them there, which means there'll be questions down here with answers attached that other people can learn from. So ideally, this is where you'd go to ask questions, because it means other people can learn from this area. We can all come here to learn together. If not, of course, you can email me. It's whatever you're most comfortable with. But if you are comfortable, please do post questions via this link. It's tradewithufos.com/Becky. Alrighty, let's get cracking into the content. So we have that email that we send out every day. That's on the left hand side, and then we have the trading software on our right hand side. We're looking at TradingView, showing the charts, just so we get a bit more context as to what's going on and where this information is coming from. So as I said, we look at a 3D approach, meaning we look at 3 separate elements when it comes to the statistics in our trading. The first thing we look at is market climate, which is where do we have probabilities? Where's the market likely to go? Is it likely to go up? Is it likely to go down, or is it not really likely to go either direction? In which case we have a better idea of whether or not we buy, sell, or do nothing based on where the probabilities actually lie. So we use an app to help us with this. It's a free app on most platforms you can get it on. It's called AutoClimate. Ignore the lines on it and just look at the dots for now. What AutoClimate is doing is telling us where the upcoming market direction is more likely to be. So if it's a thick blue dot, that tells us probability is upwards. So if we're going to do anything, we should look to buy. If we have a thick red dot, that tells us probability is downwards. So if we're going to do anything, we should look to sell. And if we have a thin dot of either colour, that tells us not enough probability either way. So do nothing. So it really helps us to figure out really what should we be doing from the off when we're trading. The second thing we'll look at are buy and sell UFOs. UFO stands for unfilled orders. Essentially what we're doing is we want to know where are lots of buyers and where are lots of sellers. Now that's helpful because the only way price can go up in anything is if you have more buyers than sellers. So by knowing where most buyers are, or where big chunks of buyers are, gives us a better understanding that likelihood is price goes up from there. Same with sellers. The only way price can go down is if you have more sellers than buyers. So by knowing where lots of sellers are, gives us probability that price falls from there. So again, we use an app to help us. We use the AutoUFO app, and it shows us these little green UFOs with the prices on the right hand side. That shows us where the buyers are. Also shows us red UFOs with the prices on the right hand side. That shows us where the sellers are. So we can see visually and with the prices where the buyers and sellers are to give us an idea of where price is likely to go up or down from. Then the last thing we look at is market volatility, essentially how quickly are these markets moving. So we'll look at these per market, starting with the S&P 500. Let's bring that down there. So the S&P 500 is an index of the top 500 US stocks. That's what we're looking at. Now each of the markets we're looking at are looking at daily charts, so everything that we're looking at is relevant to the daily chart. It might be different on different time frames. So with the S&P on a daily chart, we have a confirmed upwards climate, a thick blue dot on our AutoClimate, probability to the upside. Now we're overextended. We have gone nearly twice as far as what's normal in terms of a move to the upside, but we do still have probability up. So bear in mind that we're overextended, but still probability upwards. We also have buy orders here between 46.19.50 to 45.59.25. So that's where we have buyers. In terms of volatility, we'd expect that the S&P would move up or down in 1 year of 15.37%. So in a day, that's up or down of 45.34 points. In a week, 99.82 points, and in a month, 207.79 points. So that's the S&P. Now, moving on to the next market, which is crude oil. Now, as I load it, it says here about the different courses that we offer. We do courses in stocks, futures, forex, backtesting, trading plans, and psychology. So if any of those you think would be helpful, by all means, check them out. A lot of them come with 3 months complimentary access to the apps. AutoClimate's a free app anyway. On most platforms you can get it on. AutoUFOs is a subscription model, so you pay for the app monthly. You can subscribe directly to them. You don't have to do a course if you don't want to. You can just go straight and download the app and use it there to show you where buyers and sellers are. Most of the time, though, it's actually cheaper to do a course and get 3 months free access for the apps than it would be to just go straight for the apps, if that makes sense. So check out what you want to do, see what works best for you. So coming back to oil, we have a confirmed downwards climate, a thick red dot here, probability to the downside. We're also towards the start of a move to a downside based on what usually happens. So we've got a bit of room for it to continue based on the statistics of what usually happens. We don't have any sellers that we can see close by. We have buyers quite a way down at 71.48 to 69.39. So we've got quite a way to go before we hit them. So probability down here for oil with room to continue to go down. Now, with market volatility with oil, we would expect it to move up or down in 1 year of 38.56%. So in 1 day, that's 1.94 points up or down. In 1 week, that's 4.26 points. And in 1 month, 8.87 points. That's oil. Now moving on to the next market, which is gold. Now, as I load gold, it says here about coaching and support. We do a bunch of coaching and support for free on lots of free platforms. So check us out on YouTube and Facebook and things like that. We also have a closed coaching community, which is access to more of our time in a closed environment, which is a small monthly fee. So check out which ones are most helpful for you. But like I said, we do a lot for free. So with gold, we have an unconfirmed climate. We have a thin dot, kind of hard to see. Let me really spread that out, make that very big. There we go. So you can see that that's a thin dot. It's not as thick as ones nearby it. That tells us we don't have enough probability either way. Not to the upside, not to the downside, therefore do nothing. If we don't have probabilities one side or the other, no point doing anything. Now, when it comes to our buyers and sellers, let's squish this up a little bit again, just to make that a bit easier to see. We have sellers up here at 1866 to 1804.4. They've already worked a few times. Once here to push price down. Again here, they push price down. Price came up, pushed back down again. And then they're coming up again. So we expect sellers to push price down. It's already done it a few times. Wouldn't be surprised to see it fall from there. But for the time being, it's unconfirmed, so wouldn't really do anything anyway. We'll look to see what happens here with these sellers. Buyers all the way down here, quite low down, so no need to pay attention to them right now. In terms of volatility, we'd expect that gold would move up or down in 1 year by 15.87%. So in a day, that's 17.95 points up or down. In a week, 39.52 points, and in a month, 82.26 points. Okay, so moving on to the US dollar. Now the US dollar is responsible for about 80% of transactions worldwide every day across the board. So whether you trade it or not, be aware of what it does because it's likely to impact the other things that you do trade. So with the US dollar, we do have a confirmed upwards climate, thick blue dot there, probability to the upside. We're also at the start of what would be a move to the upside based on what usually happens. So we've got some room for it to continue up. We have buyers down here at 92.88 to 92.31. However, we're closer to the sellers, 95.375 to 94.775. So we do still have probability to the upside for now. Once we hit those sellers, they're going to start trying to push price down. So at that point, I'd say get out if you're long. Don't be in it because you don't want to be buying, or you don't want to be trying to go long. Go to the upside if you've got loads of sellers in the way. But we do have a bit of room for now. So overall, still probability to the upside for the time being with the US dollar. Now, in terms of volatility, we'd expect the US dollar to move up or down in 1 year by 5.14%. So in a day, that's up or down by 0.31 points. In a week, 0.67 points. And in a month, 1.4 points. So that's the US dollar. Last but not least is backed Bitcoin. Now, bear in mind, just to remind you guys, when we talk about these statistics and the probabilities and things like that, that does not mean that it's guaranteed or that's 100% going to happen. Nothing in life is guaranteed, especially not in the markets. So yes, we want to make sure that we know where the probabilities lie. Makes more sense to be trading based on what's more likely to happen than not. But at the same time, of course, we still need to manage our risk and maybe even add extra layers in to increase probability if that's what you want to do. Okay, backed Bitcoin now has an unconfirmed climate, a thin dot there telling us not enough probabilities either way. Now, not surprising because it was on its way up, and then we've just had some sellers that have arrived between 64,547.5 to 62,067.5. We then have buyers down here, and they are between 58,347.5 to 53,860. So we're kind of in a bit of a range here. We've had buyers that have pushed price up. We've got sellers that are now pushing price down. The climate's now unsure what it's doing. So keep away from it. We don't need to trade something that doesn't have probabilities clear in one direction. Change time frame, change market. No need to trade something that doesn't have enough probabilities. Now, in terms of volatility, we expect that Bitcoin would go up or down in 1 year of 87.65%. So in a day, that's up or down of 3,424.12. In a week would be 7,537.84. And in a month, 15,691.27, again, up or down. So for each of these markets, we've gone through 5 different markets, and for each of them, we've looked at 3 elements. First thing was market climate. Using an app, which is a free app on most platforms, AutoClimate, giving us an idea of where probabilities are. Are they up, down, or nowhere? And therefore, we'd have a better idea of whether or not to buy, sell, or do nothing. Then we've looked at where the buyers and sellers are. Where are the big stacks of buyers and the big stacks of sellers that could be pushing price up or down respectively? So we have an idea of where price might turn. Then we've looked at volatility, how quickly the markets move up or down based on expectations that actually come from options statistics. So those are the 3 different elements that we look at. Those are the 5 different markets that we've looked at. Just to round off, we check our weekly economic calendar. It's a bit of a big one this week, so we'll scroll down a bit. We get this from the fxstreet.com economic calendar. We filter by high impact news, meaning we want to know which news reports that are scheduled to come out are likely to create a high impact in the markets and therefore create a bit more volatility, get them moving a little bit more, so that we can manage our risk accordingly. So today we had some news out on the European markets early on, and today we have round about now some non-farm payrolls in the States. They tend to create volatility, so be aware of that. And a little bit later on this morning, similar kind of big reports coming out in the Canadian market. So if you trade in those markets or those currencies, be aware of that. Okay, like I said, if you have any questions, you can email me, becky@tradictive.com, or you can email support@tradictive.com. However, ideally, the place you go to ask questions is tradewithufos.com/Becky, because from here, you can get apps, you can book one-on-one coaching, but most importantly, you can ask questions once you've signed in into this space, which means I can answer questions in this space and everybody learns from the same area. So hopefully that makes sense. Please let me know if you have any questions. Otherwise, guys, have a great end to your trading week. Have a great weekend, and I will see you